Hi friends, this is John Kingston from JR Trading Zone. In this video, I am going to make a simple presentation where we can begin our trading. You are a beginner to trading business. Then where should you begin? Most of the people who don't know about stock market trading directly enter into the derivative market because it is more attractive. Buying and selling of options, trading in futures is more attractive because of its profits. But a beginner should not enter the derivative market directly. How this stock market journey should be planned, I have made a separate video. Okay, the basics of stock market. You have to watch that video. I will be giving in the I button above. Watch the video and then come to this video. The steps how we have to enter into the stock market. The second step is the becoming a trader. First, you should be an investor, at least a simple investor. You must be invested in some stocks and you should regularly watch its movements. Okay, that's the first step. Second, you are entering into a trading business. Most of the people, as I told, they go directly to derivative market, either option buying, option selling, or they trading futures. Lose all the money and leave the market. This is the end of most of the traders who enter the market. But I am telling one thing, we should begin our trading. If you are a beginner, definitely you should begin your trading in stocks. 5 points I am going to explain why we should trade in stocks, why should we not trade in derivative market, especially options. I am not talking more about futures, I am talking about options, because most of the youngsters who come here, beginners come here, directly go to the option buying or selling business. Okay, first point is, when you trade in stocks, you can buy any quantity of stocks. 1 stock, 2 stock, 5 stock, 10 stock, or n number of stocks. If you are practicing, you can even practice with buying or selling only one piece of instrument. If you are trading in Infosys, you can buy one Infosys stock. If you are trading in Tata Motors, you can buy or sell one Tata Motors. Okay, you can practice like that when you are entering into the, what we say, trading stocks. But if you are entering the options market, you have to buy in lots. The lot size of Nifty is 50. The lot size of Bank Nifty is 25. The lot size of Fin Nifty is 40. Okay, you have to buy in lots. Okay, this is the first point. First point, if you are practicing, you can practice with even buying or selling one stock. That is the plus point in beginning with stock. That is the first. The second difference, in stock you are getting leverage 5x, 10x or 20x according to the broker. Okay. Second difference, I don't tell this is a plus point or minus point. Okay, I am telling the difference between trading in stocks and trading in options. Okay, you get a leverage of 5x, 10x or even 20. If, for example, if you are having 10,000 rupees with you, in some stocks you will be allowed to buy or sell for 1 lakh rupees. The broker will provide you a leverage of 10x, sometimes even more according to the broker and according to the stock. But when you go to the options market, if you are an option buyer, you have to pay the premium. If you are an option seller, you have to pay the margin money, which is comparatively huge and risky. Why it is risky, I will tell you. The third point, if you are an intraday trader, you should close your position within 3:15. Okay, some brokers will provide extra 5-minute time like Zerodha. You have to close the position. If you have bought the stock, you have to sell it at 3:15. If you have sold the stock first, you have to buy it and close the position that day itself. That is called intraday. But when you are trading in options, you can carry forward the position until the expiry, where there is a lot of risk. Okay, where you are carrying lot of overnight risk. Therefore, we should know what is our risk and other factors which are affecting the overnight positions. Okay, the fourth important thing is a stock movement or the price of the stock is not affected by factors like delta, theta, gamma, vega and rho. Okay, these are the factors which does not affect the price of the stock. But when you are trading in options, the condition is completely different. There you are having different types of strikes. Out of the money options, at the money options and in the money options. OTM, ATM and ITM. Each and every strike are contracts and they are having expiry. So you can carry forward the position until the expiry. For example, if you are trading in weekly options, you can carry forward the position till the weekly expiry. If you are trading in monthly options, you can carry forward the position or carry forward the position until the end of the monthly expiry. But this is not possible in stock. In stock, if you are trading, you have to close the position that day itself. So there also you are having little risk. The main thing which affects this strike is delta, theta, gamma, vega and rho. Each and every day this strike will be behaving in a different way. Friday, the movement of your strike will be different. Monday, the movement of your particular strike will be different. Tuesday, it will be completely different. Wednesday and Thursday, also it will be different. Especially on the expiry day, completely your strike will behave in a different manner. This is because each and every strike which you are buying or selling is completely affected by factors like delta, theta, gamma, vega and rho. These are the external factors which affects the movements of your premium. So if you are having a good knowledge in this section, only you can go to the options market. Most of the beginners who enter into the market don't have any idea of how these factors are affecting their particular strike. They just go and buy blindly and lost their entire money. The fifth point, if you are a price action trader, price action works both in stocks and in options. I won't say it is not working there, it is working here like that. But more easy you can identify price actions in stocks. You have to be much experienced to identify the price action when you are trading in index. I am an index trader and I trade in Nifty, Bank Nifty and Film Nifty, but you should be much more concerned about the movements of this index. You are not allowed to trade directly in the index. Index will show a particular price movement and beautiful price actions, but choosing the strike and selecting the particular strike and trading in the particular strike, you should know a lot of factors, because each and every day your strike will behave differently. There you can't find a price action because these factors which I told you, delta, theta, gamma, vega and rho, will be affecting your strike movements. You can find the price action in your index, but you can't find the price action in your option strike which you are trading. Okay, there is a risky element. But when you trade in stocks, you can find the direct price action in your stock movements. These are the 5 differences, and I always suggest and recommend, if you are a beginner into trading business, you should trade in stocks. You can trade with one stock. Okay, you can buy, sell one stock. You can watch its movement. You can learn a lot from it. That's all in this video. I just want to make a presentation why the beginners should enter into the stock market trading through trading in stocks. Okay, just 5 points I have explained in this video. Watch it repeatedly, understand carefully, and begin your trading journey successfully. Have a good trading journey in your life. Learn more and earn more, because we have to learn more. When you come to derivative market, you have to get a lot of idea about the movements, price movements and everything. So it will be very risky if you are entering direct into the derivative market without proper knowledge. Therefore, I recommend everyone that if you are a beginner into the trading business, you just begin your trading journey by trading in stocks. That's all in this video. See you in the next video. This is John Kingston signing off from JR Trading Zone. Bye.